welcome to this NEO Spotlight, a new name that we're using and will be using in the future, and to where we're going to spend half an hour talking with the CEO of a company that just listed on NEO. We used to call it Q&A in the past, but I think Spotlight is definitely a much better term, and the term we're going to be using going forward. Today, the company we're going to zoom in on is Abaxx Technologies, and I'm very happy to be able to welcome the CEO, Josh Crumb, who's here with us. Josh, welcome to this NEO Spotlight session.
Good afternoon. Thanks for having me on.
True pleasure. Josh, your company has now been listed on NEO, I think probably for about a month. My memory is correct. The listing was on the 20th of December. And I think what I would love to start with is to ask you to tell us a little bit more about the company, like without maybe going into too much detail about strategy and things like that. But you know, we have a crowd here that definitely is going to be interested to understand in more detail what is Abaxx Technologies doing and what are the components of it.
Great, thanks, Josh. So Abaxx Technologies is a financial technology company. We've been working for about 3 years now. So this has been a long development. And really what we're focused on is the future of commodity trading. And we look at that from two angles. One is actually, what are the types of commodity indices and the commodity prices and data that the world is looking for, and particularly as we enter this quite significant period of energy transition, where the global economy tries to reduce its hydrocarbon exposure to things like oil and coal, and moves more into natural gas and renewables. So just like we have the WTI oil price or the LME copper price, we believe there's a series of new prices and new benchmarks that the commodity industry is going to need to help risk transfer and capitalize the energy transition, including a price for carbon. And we can talk a little bit more about how we believe the world will shape up there. And then the second piece is really the technology piece. We think all markets, and so, something I'm sure you're very well aware of yourself, launching a new exchange as well, is really the exchange landscape is also moves along with the history of communications technology and financial technology and internet technology. So we're really investing in both sides, both the digitization and the constant improvement of electronic markets, as well as actually thinking about new commodity data and new commodity benchmarks that are needed to facilitate the energy transition. Maybe talking a little bit more about the steps of the business. Again, we're what some might say a full stack startup, looking at both the technology side as well as the commercial and the business side. So our first step, and really our first objectives as a company, is to launch a new commodity futures exchange based in Singapore. And so if we think about some of the world's great exchanges, you think about the NYMEX, now part of the CME group, where I mentioned the oil price before. The WTI oil price is a contract and derivatives traded around an actual physical delivery of physical crude oil, traded, and that marketplace has been developed by the NYMEX, now part of the CME group. So when we look at the energy transition, we think just like that WTI oil price, that oil price you look at the bottom of your screen, is a very important indicator of the global economy. We believe that over the next 5 to 10 years, the liquefied natural gas, this is the seaborne international gas price, we believe that's going to be one of the most important benchmarks for the world going forward. And really what it's pricing is the export of excess energy in markets like the United States or Australia or eventually Canada, Russia. So there's a number of these gas exporting economies, as well as, of course, a number of very key gas importing economies, such as mostly the large Asian economies, such as Japan, China, Korea, and really all of Southeast Asia, as they try to lower the dependence on coal, and they try to increase their imports of cleaner energy, such as natural gas. So our first product, we're looking to launch our global commodity exchange, based around again, focused broadly on the energy transition, but focused first and foremost on liquefied natural gas as a key benchmark of the energy transition. Second to that, beyond just the, to call it the traditional type of commodity market that we're looking at, one of the key things that we're trying to do different than the existing exchanges, there's really two pieces that differentiate us. Number one will be the technology, but we can talk a little bit about that more. But I think that's more of a longer term story. One of the things that really differentiates us in the near term is not only are we trying to find a better price, a physically settled price for liquefied natural gas, which again we think can be one of these large, most important commodity markets. But we're also looking at pricing in a way that that has not really been done before. Better centralized exchange clearing of what's known as externalities. Particularly if we look at the trends in ESG. I mentioned decarbonization and trying to find a price for the externality of carbon emissions, but also thinking about how do we start pricing commodities with the social and environmental goals that are important for increasingly important for consumers. So we've seen this trend in ESG become very, very important for financial markets overall, and the increased allocation to companies that are producing ESG type reporting and being able to start tracking metrics, very much like they track their financial metrics and tracking these metrics in their company. So we've seen this a lot in the equities and bond space. But what we have not seen yet to date is true progress in actually being able to price these types of externalities or these or capture the kinds of metrics that consumers are needing, not just investors, to know where the commodities come through a global supply chain. So the two things that will differentiate us long term is our focus on developing the tools and the pricing mechanisms to be able to price ESG and commodity supply chain, and particularly carbon, but also the technology that will enable us to be able to do that.
The one question that I would like to ask you is, so you're looking at also launching a new commodities exchange in Singapore. So I understand the focus on the product. I understand what you bring from a technology perspective, but why a new exchange? Don't we already have enough exchanges that could play that role or benefit maybe from some of your new tools and technologies?
Yeah, absolutely. So there's a couple of ways we could have done this. We could have focused on the underlying contracts and benchmark and an organization of the market that we've been working with the global energy industry for the last 2-3 years on, and then license that work to an existing exchange to list their futures or derivatives. Or even if we created our own exchange, we might have used with a third-party clearinghouse to be able to do this. However, we've taken the view, that we do want to be a full stack startup. We want to be able to control our own technology, control our own clearinghouse, which will allow us to innovate faster than the existing players. So what's really happened in the global exchange, as I'm sure you're quite well aware in the equity space, in the commodities similarly, we've seen this trend towards consolidation over the last 15 to 20 years, where it used to be that you had all these local physical pit trading commodity exchanges in a lot of the financial centers. Well, as a lot of this trading has moved to the screen, first we started consolidating a lot of these exchanges, more locally within say, one economy or one regulatory market. But increasingly these companies have been merging, and really we're left, when we look at global energy, you're really left with only sort of 3 or 4 global players at this time. And they've listed thousands of products, and we think this is sort of a classic, call it diseconomies of scale, where we bring a lot of expertise in our team in actual physical commodities. So well as these exchanges have been spread out across volatility products and equity and FX and all sorts of different different products, we're very much focused on solving needs of the commercial market, not just financial markets, around the energy transition. So and I should quite importantly mention some of our team. So a lot of the people as part of Abaxx and the exchange have spent many decades building these types of products at the NYMEX, at Goldman Sachs. So we have a lot of industry expertise. In fact, my co-founder in this business, Tom McMahon, was actually the chairman of the Natural Gas Committee when the NYMEX formed the Henry Hub. So we have a lot of expertise in doing this, and we believe just like you might see an exploration company that might be very much better at the development side than say an operating mining or oil and gas company, we believe we bring a lot of product development skills that are potentially lacking in some of the larger players.
Yeah, is it also a little bit acknowledging, because in what you say, I hear a bit that an underlying comment of those big groups and exchanges that are out there today, they lost a little bit of touch with reality, and that you are in fact much more in tune with the real needs and the way that things are evolving today. Is that a fair statement?
Yeah, well, I think it takes a lot of time to develop a physically settled commodity price. So it's very it's relatively easy to list a new derivative on, say, an index that already exists, or maybe a pricing market that already exists. But if we look at something like liquefied natural gas, there is still no common terms of trade that the physical industry is using to buy and sell LNG. So it's not just the derivatives and the index piece of it that needs to be developed, but actually working with industry for really we've been at this for over 2 years to really come up with the common terms of trade that people want to buy and sell and make or take physical delivery, not just a financial settlement. So we think that those types of skill sets really aren't in an exchange that's really focused on putting out maybe even one a week sort of new financial indexes, because it really takes many years to do this.
Yeah. Oh, I truly like, as you can imagine, what you say, because I'm a big believer that in fact there is a gap that has developed between exchanges and those they are supposed to service. And I think it's the same in our world. It's the same in your world. And I think it needs new entrants with skills and capabilities that is very critical. That I think can and will be in a position to really add value again to the stakeholders around us. Tell us a little bit more about your team. Who because I think you've been referring to the team a few times, but I think you pulled an incredible team together, and you also have some pretty substantial people backing your organization. Could you tell us a little bit more about that?
Yeah, absolutely. So again, I mentioned my co-founder Tom McMahon, who's based out in Singapore, again involved in early NYMEX days, and developing right from the WTI, Henry Hub, and then their electronic clearing platform, Clearport. And actually, Tom was involved in taking Clearport out to Asia. So that's how we ended up in Japan and Singapore. And then also Dan McElduff, the president of our exchange, was involved in also developing Clearport and a lot of the gas and power markets for NYMEX, as well as helping build an exchange called ELX, which was another sort of challenger exchange. Joe Rea is our chief commercial officer, actually headed up metals and energy products sales for the CME group. So essentially NYMEX and COMEX. And then Nancy Sia is our managing director out in Singapore. She was the co-head of commodity sales for Goldman Sachs out in Singapore, and the chair of JAIR in China, Goldman's commodity business in China. So very good relationships. And then also we've got a very strong risk and operations team. Our chief risk officer actually headed up a role in Goldman Sachs where he analyzed the risk of all the different clearinghouses globally. So a lot of global knowledge, and that's quite key in an industry like ours, where although we will be located and regulated in Singapore, we really we're going to be a 24/6 global market from day one. With energy traders coming out of New York and Connecticut and Houston, as well as London and Geneva, and then of course into Singapore, Hong Kong, Beijing, Seoul. So we're going to be very global from day one, given the nature of our product. So we really needed to build a team that is really global natives, right? Digital natives and time zone natives, as many commodity people are. As far as some of the backers in our early stage of our development, this is a little bit different than a number of tech companies where you sort of maybe develop a product, generate some early revenue, and try to grow revenue. Because we're a highly regulated industry, we really it's really going to be 3 years from our development to the point of first revenue, and we need to have the regulatory piece. So we looked at this very much like a mine or an oil and gas sort of infrastructure development. So we needed the type of Canadian capital market investors that are very used to those kind of long lead time developments. And so we've been able to attract, some of our seed shareholders that have been kind of, vocal behind us, or Robert Friedland, obviously a very legendary mine developer, Kyle Bass, and very in tune with financial markets, Eric Townsend. So yeah, we have a number of macro investors that kind of see the transition that we're investing into.
All of this continues to confirm about how much of a solid initiative you are. A clear vision on the market opportunity, a clear set of products and tools that you bring, an incredibly solid team, solid backers behind you. So this feels like an initiative that is really set to go far. So using the word far makes me think, of course, about a strategy. So there's what you're working on now, there's what you're seeking to achieve now. How do you see your organization on the longer term? Like what do you see as future evolution? What are your longer term strategies that you are contemplating, not necessarily working on today, but what can we share about that?
Well, absolutely, and I would say, like many companies, the last 12 months has really accelerated, timelines of what might have been a 5-year plan. Maybe it gets condensed into a 2-year plan because of how fast the world's changing. So I would say, again, the first part of our business, we're really kind of elephant hunting, one of the key global, price benchmarks for a commodity, and these are the types of markets that can generate 200, 300, $500 million a year in revenue in a known business, right? So that's sort of the first part. But where we want to really try to differentiate rather than just iterate in the existing market is really trying to move the ball forward. As I mentioned, some of the ESG related products. Right now, can we figure out a way to price carbon emissions in a way that will actually really allow industries, particularly upstream resource industries and energy and metals and mining, agriculture, really allow them to differentiate and invest in decarbonization, right? Having an actual price in carbon that can differentiate, say, green copper from gray copper, or something like that, right? So that's where we, so I mean, although LNG is already sort of a white space that we're not just trying to take market share, we're actually trying to develop a new product that doesn't exist. What will really move the ball forward is some of the work that we're doing in the ESG space to be able to try to actually price some of these externalities. As an example, the World Gold Council talks about how consumers in jewelry are ready to pay more for ethically sourced gold and so forth. And we've been seeing that all the time. But what really ends up happening is probably 8 out of $10 spent is spent at the consumer end, and call it greenwashing or marketing. We're actually not seeing that capital and that price differential flow back to the actual upstream producers that are trying to do better. So that we think is a very key thing. Is we've got a world, in my mind, kind of a wash and greenwashing, and we actually need to, we do believe that there's a lot of companies that are very serious about this, and we think they should be paid more for doing better, and there should be, both the carrot and the stick, which ultimately will be set by transparency. The market will set these prices, but we need more transparency to allow the market to set these prices.
Yeah, so lots of opportunities ahead of you. Let's zoom in a little bit more on the perspective of the investor now. So I think you gave a very good view about your organization and where it's going to and the qualities. But I'm an investor. I'm looking at the company. The company is now listed publicly. Why should I invest? Why should I buy shares? What would you tell me? Because it's things are still ahead of us, and we're not yet cash flow break even. There's a question that came in around, when do you expect to be cash flow break even? Can you share a few thoughts about that? When you expect that to happen, but more importantly, why as an investor should I step in now?
Yeah, absolutely. So again, and this is one of the main reasons why we came to Canadian markets is we believe that Canadian investors are particularly well equipped to invest in infrastructure investments, typically in upstream commodities, but we've also seen it in sort of emerging technologies, whether it's in, pharmaceuticals and the cannabis space or something like that. So Canadian investors are very much experienced in this sort of pre-revenue infrastructure investing that's not the same as sort of VC investing in, say, Silicon Valley. And so for us, we did invest for about 2.5 years privately, and we received our first regulatory our exchange approval in principle from the Monetary Authority of Singapore, our regulator, last fall. So that was really the point where we believed we were comfortable to go public, and we will be working towards a launch this summer, where we'll need our final license, which is our clearinghouse license, to be able to launch the exchange. So again, thinking much like a resource, you do the development work up to the point of regulatory, and then you sort of finally capitalize and launch the product. So this is a little bit different than, say, a technology company because of the type of regulated infrastructure we're building. So right now we are in that period where we're still that early stage company, but with very large potential. Again, if you look at the valuations of some of these global energy exchanges and commodity exchanges, they trade at very high multiples, almost like a tech company, because they're very high margin products. once you create that global liquidity, we can have exposure to this whole decarbonization theme and to this, gas theme, but without, needing the billions of dollars in capex, that a lot of the, the gas companies or EV companies will need. So it's a very capital efficient business if you can kind of, call it win the market. So in that way, that sense, it's a lot like a technology company where, once we start showing that the market, that we develop the liquidity to be, the global benchmark for something like carbon, we could be one of the most important exchanges in the world, relatively quickly. Now, of course, it's still very, very high risk, but it's in that risk reward, period just before we launch.
Yeah. So the time is really now. The time is really now because of the level of readiness and clarity that you have achieved with respect to the product, readiness you have achieved with respect to your technology, your platform, and the first steps you've set from a regulatory perspective. So all the core components are there. And if you want to take advantage of that reward, your point is really now is when you want to invest, because once it goes and once it moves and we start to see the success, you'll be running after the facts. Is that the fair way to put it?
Absolutely, and this is why we listed in Canada again. Having particularly given some of the backers behind us who are very well known investors in Canadian capital markets, and even listing on exchange said like yourselves. We have a very senior sort of quality project. We're not just a startup venture, given the years of investment and the type of people and capital behind us. So we needed a senior exchange, but we thought Canadian markets were right, and we believe over time we'll likely list in the U.S. or Singapore. Maybe have a NASDAQ listing as well, as we actually get into the revenue. But this is the time period where we're really focused on the Canadian earlier stage investor, and ones with a lot of forward-looking vision, which is a key reason why we chose to list on the NEO.
Yeah, no, I do absolutely believe it's one of the big strengths of this market is that you can find that type of investor that you need at this stage in a company. And I think that a lot of people outside of Canada should definitely continue to look into this country for the opportunities it can represent to support companies like yours. But I want to insist on a couple of words that you used: quality companies with quality teams, with quality backers, with a quality vision and a quality approach, because that is what is critical, and that is something that I am very proud about, that we can be a party helping you in that process. There's a question that comes back. May I ask you again? I leave that up to you, Josh, on how you want to answer that. How much cash will Abaxx require to reach cash flow break even? I made the question a little bit more generic earlier, but any additional thoughts you would like to put forward towards that question?
Yeah, so we have about call it a net 10 million in cash on our balance sheet, as give or take around the end of the year. So we and given our current pre-launch trajectory, this gives us about a year to get to the point of up and run, to launch in the exchange. That said, once we're actually to the point of our clearinghouse licenses and ready to launch the exchange, we will need to raise additional regulatory capital for the risk default funds in our clearinghouse, and then probably some initial sort of ramp up capital. It really depends on the timeline. So we're looking at probably around 20 million, 15 to 20 million in capital needs. Really, sometime in, starting in Q2. I mean, there's no overhang now, of course, but once we're ready to launch the exchange. Again, thinking about, similarly to a resource project when you get to the point of taking off. And so there's a couple ways that we could raise that capital. One, of course, having the ability to do that in public markets, which is one of the reasons why we listed. But we've also had strong interest from some of the global banks and energy companies, and even some of the sovereign wealth funds out in Asia, to be a partner of that they're going to be both participants in the exchange as well as wanting to own a piece of it. So that so we do have the opportunity to raise that directly from a strategic partner. And so really over the next few months, we're going to be assessing, as we get to the point of launch, we're going to be assessing the best way to raise that capital. As far as the timeline, what's different than, say, a commodity exchange than some other, again, from a technology business or some of the equity exchanges, is really we're focused on the physical, building a physical futures curve first, getting commercial participants to be building the open interest. But that doesn't necessarily drive the revenue, but that drives the strategic interest in our market. Once we have the physical industry using our benchmark, then there's lots of things we can do to add liquidity to the market. Bringing in commodity specific funds and CTAs and high frequency traders and all of the different people that actually participate in a market and price discovery. That's what drives the volume. So strategically, we first need to build the curve. And then there's all sorts of things that we can do to drive volume into the liquidity. So, typically, again, once the industry starts using a new benchmark, we believe that, it could be within a year, that it can ramp up very quickly as far as being cash flow break even, and then generating, very high margins, which are typical in these types of businesses.
Yeah. No, and I think the process and the approach that you follow, and I say that as a colleague from a different asset class, that is absolutely the way that we did it also. Like you do it in a number of rounds, and then you do a last one just before you effectively launch, and I think it's a very logical and natural process to do it. Any other questions? I'm quickly looking if there's any other questions from the crowd, because we're getting or we are pretty much past the time we allocated for this discussion. Typically a question I ask at the end, but you already answered it, is why did you list on the NEO exchange? So I'm not going to ask you that one. I think it's a combination of coming to the Canadian market and what makes it unique, and then finding an exchange that is both senior and probably a bit unique also. So I'm going to ask you one other last question. You talked about interest. You talked about sovereign funds. You talked about banks. What can you share about the reaction that you've seen around you in the community to your value proposition? And I think it would be interesting to get a bit of a feel of that, because that usually says a lot.
Yeah, absolutely. So I would say because we have a lot of experience, right, both in the Goldman commodities side as well as the exchange and NYMEX side, there weren't a lot of people we didn't know. There weren't a lot of the large household names in the energy companies and energy traders, global banks. So that getting in the door was one thing. But really, in the early days, there was a lot of interest around the LNG product, which has only been accelerated. If you look at what's happened in global gas markets over the last couple of weeks, there's a lot of problems with the way right now natural gas is trading globally, right? So you've got less than $3 in the U.S. and you've got over $30 some cargoes traded in Asia. So an arbitrage shouldn't allow for that. So the market needs new solutions to dampen the volatility and true buyer and seller of last resort. So that's been clear for the last couple of years in all of the people we're talking to. But what's really accelerated it from the trader level that really understands the physical markets to really getting broad interest in what we're doing and talking to a lot of the C-suites at the global banks and energy companies the last few months, is what we're doing in the carbon markets. This is clearly top of mind for everybody, not just for energy traders, but for national governments and regulators and so forth. So that's really, I'd say, what's really accelerated what we're doing, and really given a lot of priority. And yeah, I mean, we have a lot of firms very, very interested in what we're doing. I know we're running short of time, but I do want to again thank you again for the for why we listed on NEO is really your commercial approach, and very much like us, I think we share a very common DNA that we want to move the market forward, right? So and that was very important to us to list with a like-minded commercial exchange that actually has a vision for the future as well. And I would encourage everybody listening to check out our podcast that we sponsor called Smarter Markets. Joss was actually on this past weekend and talks a lot about the problems in equity markets. And again, we come from a very similar background in wanting to move the market forward. So I would definitely encourage people to check out Smarter Markets podcast and listen to what Joss had to say as well.
Thank you, Josh. That's a very nice plug. I was not expecting that. Look, I think this was a great conversation. My apologies to you and the participants for the little technical glitch we had, but I think that we managed nevertheless to bring over all the key information about your organization and more importantly, a good feeling about the quality of the organization, what's behind it, the team, and the vision that it has. And yes, I'm going to repeat myself here also. We feel really, very honored, and we think it's great to be able to list an organization like yours, which reminds us in so many ways of who we are. And I can tell you, Josh, you have not only a listing venue here in front of you, you have a partner and a friend that will do whatever we can to support you in your way forward. And I have no doubts that way forward is going to be exciting and successful. Thank you very much. Thank you for your time. Thank you to all the participants, and looking forward to the next update, Josh, you're going to give us through press, media, and other channels, because I'm sure there's going to be quite a few in the weeks and months to come. Thank you.
Absolutely. Thank you, Josh.